folks. Welcome to the Daily Coin. My name is Rory, and today is Thursday, December the 19th, 2019. Have the very distinct honor and great pleasure of welcoming back to the Daily Coin someone who I've had one other conversation with, and it was really one of the best conversations I've had with someone in a long time. Wanted to get him back on for year end. He is the founder and CEO of BMG-Group. He is also the author of an incredible gold book titled $10,000 Gold, Why Gold's Inevitable Rise is the Investor's Safe Haven. And of course, I'm talking about Mr. Nick Barisheff. Nick, welcome back to the Daily Coin.
My pleasure, Rory. Thanks for having me.
Well, I'm really glad that you're here. We've got a lot to talk about, and it's year end, so we're going to jump right in.
Only they want to give them amnesty, but they want to give them free medical and welfare. So that'll really work with a $23 trillion deficit.
The whole thing is a scam and a sham, and they being every person in Washington, D.C. is attempting to eliminate you and I and be done with us,
Right.
and to redo the entire nation. I mean, one of the things that's happening, Nick, I don't know if you've noticed this or picked up on it, but around the country, you're starting to see in Virginia and Georgia both have now are beginning to roll out anti-Second Amendment laws at the state level.
Right.
And it's Missouri. Josh Hawley, who is a representative from Missouri, he is attacking the Titans in Silicon Valley, and he was part of the team that wrote legislation into the state constitution of Missouri that not only looks forward, but it looks back, and it also looks at today. And it is now, Missouri has the strongest Second Amendment laws in the nation, to where it is completely and absolutely protected from anything that the tyrants in D.C. have to say. Any legislation that they pass in D.C. is completely and absolutely negated from this point forward, and even retroactively.
Wow.
That's how strong they made it. That if you pass something and you backdate it 10 years, doesn't matter. We could care less. We ain't gonna recognize it. And they wrote it in such a way that it'll be almost impossible for any future legislators to override it. I mean, these guys thought it through.
Yeah.
They really did. It's pretty awesome.
Well, it's as the saying goes, and the noose seems to be tightening and tightening, and most people are totally unaware of it. They're complacent. The economy's fine. The market's going up, and lowest unemployment in history. So they're completely delusional in terms of the reality.
Yeah, they have no idea what's going on. And yeah, I mean, you have two different people out there. This is my experience, and you may see it different. I'd love to hear what you have to say about it. But I see two different people. I see one group of people that you just described that are completely complacent. They listen to the cheerleading by corporate media saying, stock market's at all-time high, unemployment's at all-time historic lows, blah, blah, blah. Life is good, rainbows and unicorns as far as the eye can see. Then you have the other group of people that are borderline destitute, that are so busy working themselves into their grave that they don't have time to hear even that, that there are rainbows and unicorns as far as the eye can see. They are completely inundated with trying to
Because
keep a roof over their head and food on the table.
unemployment statistics are distorted because they where people used to have one job, that in some cases they've got 2 and 3, and they count those all as separate jobs, and they don't amount to even one job. So this is the problem. People are working, spinning the wheel on their particular hamster wheel, and they can't deal with anything because their main concern is putting food on the table and having a roof over your head.
It makes it much more of a challenge to hear any message that you and I have about how to get out of this or how to protect yourself. I mean, I don't have time for that because my child is sick. I have 2.5 jobs that I'm working. The spouse is working 2.5 jobs. We're, barely holding on here. And I've got Alexandria Communist Cortez telling me that that the planet's going to end in 12 years.
Right.
It's like, what's more important here? What's the, which way do I turn?
Well, this is what the problem is, and I think that see in the next downturn, which is in both imminent and inevitable. I think you're going to have massive civil insurrection and riots because people will be that desperate. There'll be nothing left. When they lose everything, they'll have nothing left to lose.
Couldn't agree more. I really couldn't. I think that we're already starting to see and hear those under that rumble at the very base is starting to happen right now. I think that's where we're at.
Right.
And it's not going to take a whole lot for that to become a roar.
That's right.
That's what I see anyway. And how do you see 2020 looking? I mean, do you see these kinds of things unfolding over the course of the next, 12 to 18 months? Or do you think we're going to hold on? I mean, what do you think?
The details, specifics are always hard to predict, and particularly when you have like irrational exuberance in the market. Greenspan made his irrational exuberance speech in 1998, and the market kept going up until the end of 1999. So markets can go up a lot longer. The current bull market is the longest one in history and the highest one. And if it just reverts to the historic average bear market, that's a 46% drop. But most reversions, go past the mean, so the drop will be more than 46%.
I don't know if you're familiar with Craig Hemke or not, over at TF Metals Report, but he put together a historic chart looking at the S&P, and he went back. This was about maybe 4 years ago. He had gone back from that point 25 years and looked at these different plunges in the S&P, and what he found was an average of 52% drop. So the 46% that you're talking about is right on target. And if we imagine what the average person that we were just describing, one being in the head in the clouds and the other one trying to keep food on the table. Imagine the response from those people if they wake up tomorrow morning and the S&P has dropped 50%, which could happen.
Well, you see, the vast majority of the people don't have any money invested in the market to begin with. Right. So the market is not a bull market by the people, but the rise is largely due to corporations buying back their own shares with borrowed money. So the average person isn't going to be directly affected. Where they're affected is on the pension side. On the pension side, we have unfunded in the U.S. unfunded Medicare and pension liabilities of 120 trillion. That's 380,000 per person. Now, because only 50% of the people pay taxes, that's actually 760,000 per taxpayer. Okay. That's right now before the market crash. When the market crashes, what happens is the assets get reduced by the amount of the crash, and the unfunded liabilities get increased by what you've lost in assets. And the S&P 500 companies alone are 340 billion underfunded. In Canada, the situation's the same. We have 2.2 trillion in unfunded pension and medical liabilities. That's 243,000 per person. And of the companies listed on the TSX, the unfunded liabilities are 100 million. So these unfunded liabilities and everything are during a bull market, longest one in history. So what's going to happen when we get into a bear market? Okay, it's going to be devastating, and the issue of pension liabilities are not discussed by the mainstream media. In California, there's numerous towns that where the retirees, the teachers, the firemen, the policemen that are being retired are getting letters in the mail from CalPERS saying, from now on, your pension is going to be reduced by 50%. How do you like that? And that's the entire state of California.
Yeah, and that's the largest pension fund in the country, isn't it?
Yeah, and it's gigantically underwater.
Yes.
Next is Illinois and Chicago. They're beyond hope in terms of bailout. In Canada, we have like the Nova Scotia Teachers Pension Fund is 1.2 billion underfunded. Well, there's not enough people in Nova Scotia to fund that, never mind working teachers. Where's that going to come from?
Well, the problem with these, Nick, and correct me if I'm wrong, but the problem is that their projections that they made, CalPERS in particular, because I looked at them, it's probably been 3 or 4 years ago, maybe longer ago than that, but they were banking on a 7 to 8% return from their mutual funds and bonds and all the instruments that they had in their portfolio. And since that's tanked, I mean, if they get 2%, then that's like a banner year for them.
Last year, the globally pension funds that held a 60-40 allocation of stocks and bonds, which is the majority of them. That's all they have, 60-40 stocks and bonds.
Wow.
Last year, during the biggest bull market in history, they lost 5%.
Okay.
How do you do that?
Wow. That's stunning. Seriously, I mean, because if you've got $1 trillion and you lose 5% of that in a year, wow, you can. That's pretty tough to recover, isn't it?
Let's say the pension fund has $1 million in assets and 100,000 in unfunded liabilities. Well, if the $1 million in assets take a 50% market hit, you've got 500,000 in assets and 600,000 in unfunded liabilities. It reverts like that
instantly.
And if it's a corporation under the Pension Act, they have to amortize the unfunded liabilities over 5 years. So actually pay them out of income. So now you have a big hit on your balance sheet and a big hit on your income statement.
Not sustainable. Any way you look at it, none of this. It's all an illusion. That's the first problem. And the second problem is that when the illusion meets reality, then we're going to have serious problems. And I wanted to ask you about that, Nick, as far as the other day I was, I'd go through probably about 75 to 100 websites a day. And I, the words debt jubilee popped up on a number of occasions. And it's like, well, I haven't heard that in a while. And I don't see how a debt jubilee is even possible in our world today. It might be, but I don't really see
Well,
how that would work.
you can have a debt jubilee fairly easy, and it's happened before.
Yes.
Is you just have a major currency reset.
Okay.
Okay, what used to be $10 is now $1, and the debt has gone down accordingly, and problem solved.
Okay.
To some extent, although the U.S. likely doesn't have the gold that they purport to have, but if you were to reprice the gold at market value, then that puts a big dent into the U.S. Debt position. But that gold, I'm convinced, is in China.
Yes.
And when China makes an announcement, because they're buying through the sovereign wealth fund.
Yes.
So when they announce that the sovereign wealth fund is transferred the gold to the central bank and China has 8,000 tons, the question is going to be, where did they get the 8,000 tons from? Because the major reporting agencies, which are GFMS and CPM, have accounted for every fraction of an ounce of gold. So if China got 8,000 tons, where did they get it from? Well, the only place they can get it from is through leased gold from the central banks.
I think that it's going to be more than 8,000 once that transfer is made.
Like goal is 10,000 tons.
I'm sorry?
China's stated public goal is that they want to accumulate more than 10,000 tons.
I think they're about double that, and I'm not sure if you follow Alistair McLeod's work or if you're familiar with him, but according to some very detailed, very well researched documents that he's put together, he's all but proven that China currently potentially has around 20 to 25,000 tons. And
Right.
he went through this whole series of steps beginning in 1973, I believe, all the way up to about 2005 to 2010, somewhere in that range, and documented everything and looked at all of the different channels where gold was going and how it was moving, and that's the number that he came up with. And it makes a lot of sense because like what you said, Nick, that nobody ever talks about is the sovereign wealth fund, or the SAFE accounts that China
Because
has.
they have to report it to anybody, so
Exactly.
nobody knows.
Right.
But the thing is, no matter how much they announce, it'll become obvious that the U.S. 8,000 tons is nothing more than a promissory note to the bullion banks, and that the gold doesn't exist and never coming back.
That is a terrifying idea.
Yeah.
It really is, because that would put the U.S. in a world of hurt. Because, I mean, and let me ask you this: do you see China and Russia, the alliance that has developed and continues to develop, do you see one or the other or both bringing forth some type of gold trade settlement situation?
Well, that's been their publicly stated objective, to get away from the hegemony of the U.S. dollar.
Yes.
and that's the way, if you're going to bring on a new currency, then you want it to get confidence on its introduction. It needs to be gold backed. So that's the whole idea. Both Russia and China are the big accumulators of gold. Russia is, I think, the #2 gold producer, and they're buying all their own production.
They are buying quite a bit of it.
They're accumulating more than anyone else.
Yes, by far. They're right now on par. If they continue at the pace that they are right now, within 5 years, they'll be second in the world for gold holdings, physical gold holdings. And in 2 years, they're going to pass. They're going to pass.
So I think
Italy.
that this is the agenda, and it's not a conspiracy theory. It's actually happening right before our eyes.
Yeah, I don't really have time for theories, as I'm sure you don't either, Nick. And with all the real news out there to grab a hold of, that keeps me plenty busy, and I'm sure it does you as well. So,
a lot of conspiracy theories, like the market manipulation in gold and silvers, are now proving true.
Yes.
J.P. Morgan is being criminally charged. Several of the executives have already pleaded guilty, and the Justice Department is looking at bringing the action in under RICO, which is normally kept for the mob.
Well, if the shoe fits.
Yeah.
So how do you see? I mean, we're wrapping up year end here. Today is December the 19th, and how do you see the market has been the manipulated gold market that we see? It's been really odd the past couple of weeks, because at 6 a.m. or just right around 6 a.m. Eastern, there's been this just hammer down, and then the market opens at 8:30 Eastern, and there's another leg down, and that's happened multiple times. And this whole 6 a.m. deal, I haven't been able to figure out what's going on with that, but it's like at the stroke of 6, it's like straight down.
Yeah, many times, because it's billions of dollars are sold short on the comics, like in the billions. When these days happen, it's happened at least a half a dozen times, where it's multiple billions just out of the blue.
Out of the blue. I mean, and it's like somebody woke up one morning about a month ago and said, you know what? I think 1470 to 1475 would be a great range for gold to finish out the year. Somewhere in there, if we get to
the trouble is, it's not just the U.S. government that's interested in keeping gold down, because it's a non-confidence vote in the U.S. dollar. But China is also interested in keeping the gold down.
Sure.
They can accumulate as much as possible at low prices. So it wouldn't surprise me that this kind of what looks to be manipulation is happening from China.
I hadn't thought about that.
Press to keep the price down until they get as much gold as they intend to get.
Okay. That actually makes a lot of sense.
The price will skyrocket.
Do you think that they are approaching their stated goals and that? I mean, do you think that we're within a 5-year window?
That I've heard is 10,000 tons by the central bank. So the central bank currently holds 1,600 tons. So it's how much the sovereign wealth fund has, and China has also encouraged its citizens to buy gold. So some of the gold that's being imported to China could be going into private hands as well as the sovereign wealth fund. That we don't know.
Now, the Shanghai Gold Exchange there, for a couple of years, they were averaging about 50 tons of physical a week. They were moving through there, somewhere 45, 50 tons a week. It's calmed down a little bit, and they're now doing about 30 tons a week. But that's still quite a few tons of gold to be moving through 1 ounce at a time,
That's right.
and it's and you think that some of that is going into the sovereign wealth fund, but the majority of it is going into the hands of the citizens? Is that
Yeah,
what
I
you're
think it's a
saying?
combination of the two, and there's really no idea what that relationship may be.
Do you think they're
It's
going to?
like we don't even know. For instance, when you look at above ground stock of gold bullion, there's about 9 trillion in total, but only 1.9 trillion is what would be privately held investment grade gold. Okay, the rest is central bank gold, jewelry, industrial, etc. So the investment grade gold is only 1.94 trillion. But what we don't know out of the 1.9 trillion is how much is held by the world's wealthiest families like the Rothschilds. So under no circumstances, whatever they hold, they're never going to sell their gold for pieces of green paper, no matter what the price is.
Right.
Okay, so something less than 1.9 trillion is available. So if you take that, there's a shift in attitude from the approximately 300 trillion of stocks and bonds. If 5% decide we're going to buy gold, then you have 16 trillion chasing 1.9 trillion.
Yeah, really, all you need is 1%. I think. I don't even think you need a full percentage shift from
Yeah,
that
because right
300.
now it's only 0.5%
Yeah,
is the portfolio holdings of pension funds and individuals.
yeah, it would blow it out. I mean, that would blow the gold and silver market completely to shreds as
Well,
far as
all it's going to
physical.
take is, given that most pension funds are 60-40 stocks and bonds, all it's going to take is one decent sized pension fund to decide to buy gold, and that would be the total above ground supply gone. One.
Wow, wow. That's See, and those are the kind of numbers that I like to deal in, because that's in my opinion that's more realistic. I mean, if you start talking about a 0.5% of the, or even 25 bips uh, of the global savings, or stock market out there,
But
you know, that's all that it really takes. It doesn't take this gargantuan shift. It just takes a small amount of change to really to throw everything out. That's how fragile everything is. I mean, you're
that's
talking about one pension fund, one.
that's all it takes globally. And they're 300 trillion underwater. Okay. So somebody breaks ranks and decides to save their own ass and buy some gold.
Exactly.
The other thing that's gonna never talked about is the ETFs. So now there's two huge vulnerabilities with the ETFs. So first of all, when the authorized participants are contributing assets to an ETF, and they get shares of the ETF that they sell, and then they keep all the money. Now they get the assets in the case of equity and bond ETFs from borrowing from client margin accounts, and if they're the prime broker. So they borrow the asset, contribute it to the ETF, sell to the marketplace, and keep the money. Now, the problem with that is they have no obligation to maintain the net asset value of the ETF. On a normal day, they do by either contributing more assets or redeeming to keep the NAV in place. But they don't have the obligation to do that ever. So if the market takes a precipitous decline, the authorized participants are going to stand aside and let the markets for the ETF units fall faster than the underlying security they represent. There'll be no bid. because the bid comes from the authorized participants. So you'll have a greater decline in the ETFs than in the market. In the gold ETF, the problem is bigger because when you borrow gold, which is what they're doing, and contributing to the GLD, for example, the title to the gold still remains with the central bank from where it leased. When you lease gold, title remains with the lessor. Okay, so even though the gold may be in the vaults of the ETF, they don't own it outright. And when you read the fine print and all the documentation, it's clear that they're sitting on borrowed, assets. So this entire ETF thing, which is starting to get bigger than the mutual fund industry, is going to blow up. Like with a mutual fund, investors contribute cash and the mutual fund manager goes and buys the assets. That's not what happens in the ETF. So there's going to be losses in the ETFs that are even greater than the market losses.
Yeah, and the GLD in particular, the way that prospectus reads is that they can have third-party vaulting, and the third-party vaulting doesn't have to provide any sort of auditing or any proof of product or anything. I mean, they can literally send an email and say, we have, 100 fresh tons of gold and not have anything.
That's right.
And it's
It's
incredible.
when the GLD was first established, if you looked under Edgar, you'd see the underlying agreements. And the underlying agreements included the authorized participant agreements. So if you look at Edgar now for the latest filings, you won't find the authorized participant agreements. So you don't know how the thing works. Secondly, the original prospectus, if I recall correctly, was something like 150 pages. And when they renewed it, it was 79.
Wow.
Okay,
Wow.
so something's missing in
Yeah.
the prospectus.
Yeah. Like all the information.
That's right.
all the things that are valid and make it an actual prospectus.
So what it's done is it's deflected gold demand from naive retail investors into the GLD because it's easy and it's cheap and there's no storage and they buy the ETF.
Right.
But it defeats the whole purpose of holding gold because when the market crashes and things get severe, it's going to end up where the GLD investors end up with zero. Instead of gold protecting their portfolio, it's going to be a big zero.
Yes, they're going to have nothing. And the part that is most disturbing, in my opinion, it's not the small investor, somebody that's, say, going to invest $5,000 or $10,000, because they're, while it's going to be tragic that they're not going to be able to get it, but if you think about somebody that has $500,000 or $1 million invested into GLD, and they're thinking that they actually have gold, that they have $500,000 worth of gold, and they aren't going to be able to get anything at all. And now all of a sudden they've got nothing. And when I say nothing, I mean they have vapor. And that's the way that the whole thing reads. I mean, all you got to do is read it, and it clearly states that there's no auditing, there's no proof of product, there's no inventory of serial numbers or anything of that nature. There's nothing. There's no proof of product.
See, like normally in an agreement for a hard asset, when the vendor is conveying it to a purchaser, he represents and warns that A, he owns it, and B, that it isn't encumbered in any way, and that he's transferring good and valid title to the asset. And that's not what it says with the authorized participant contributing gold. None of that is there.
That's incredible. I mean, and like I said, the small investor, somebody that's that's gambling with $5,000 or $10,000, they're gonna suffer, but they're not gonna suffer as much as somebody that is truly investing, believes that they're investing into a hard asset called gold, when they and they put a big chunk of their wealth into the GLD, and they wind up having nothing, and they'll
Sure.
never get anything for it. And this is a great way of, at the beginning, Nick, you said you wanted to discuss some of what's the lies through omission by corporate media, and that's what we're seeing. I mean, can you imagine what would happen if just 2 or 3 minutes of any part of this conversation were to be aired on any major network or all major networks? Just think if you took like a 3 minute or 4 minute segment out of our conversation, what would happen? What do you think would happen?
Well, I'm not sure, because people are so complacent that this is the thing. Like I got a series of tapes from Ed Griffin on the monetary system that I've been listening to in the car, and the issue is the book Creature from Jekyll Island has been reprinted like a dozen times, so it's well read by thousands and thousands of people. So it's not a secret of everything he says of the way our monetary system works. But nothing happens. It must be whistling in the wind.
Well, that's not really encouraging.
No, well, it isn't. That's the unfortunate part, and that's where the fact that most people are blatantly ignorant of what's going on and could care less.
Well, it's a
They'll
good
wake
thing
up.
that. Go ahead.
It's when they won't be able to put food on the table, then they'll wake up.
Right, and I think that I'm hoping that someday that the people will run into this conversation. I hope they get to it before the food disappears from their table or the roof disappears from over their head. Hope they find it before that day. But my
Well, it's
goal is,
the thing is, it's a small percentage. Like if you go around and ask relatively wealthy people just a simple question of how much currency that you have. Now, I know that on your site you've got preparedness information, but if we start with just the currency, how much actual cash do you have? In most cases, it's zero. They have credit cards and debit cards and so on, and they can buy stuff with their iPhone. But the thing is, it's so vulnerable because all that can disappear in a heartbeat just from a computer problem.
right.
Never mind a collapse. And then suddenly you can't buy groceries or put gas in your car, even if you're a multimillionaire.
Then you have a real problem.
Yeah, well, but how difficult is that if you're wealthy to set aside 2 to 3 months of cash in your physical possession? It's not that hard, relatively low risk.
Yeah, very low risk, and
Actually, nobody does it.
well, nobody talks about it. I hope there's a lot of people that do.
The complacency, like we just are comfortable with the credit cards and the debit cards and don't realize how vulnerable. In Australia, they had half the banks in Australia had a software problem a few years ago, and for 2 weeks you couldn't tell what was in your bank account, and your credit cards and debit cards didn't work. 2 weeks just from a software glitch. Now, if you had no money for 2 weeks, right? How would you buy gas or food?
Make it pretty difficult. Make it very difficult, actually.
Right.
And most people don't have 2 weeks worth of
Software.
food, and they don't have 2 weeks worth of gas.
That's right.
That's, well, you've got to take care of yourself, and that's one of the things. And we were talking about that GLD nightmare, and you, Nick, over at the BMG-Group.com, you guys have the BMG Fund, and you have the BMG Bullion Bars Fund, and you've got a total of about $255 million in assets in between those two funds. And my guess is that there's a pretty good trail on those.
Right. Well, we've got 3 funds. We've got original fund's a gold, silver, platinum fund. Then we have a gold only fund and a silver only fund. Now, all of these are open-end mutual fund trust that every ounce that's represented in the fund is physically held and audited at the Bank of Nova Scotia. So it's fully allocated and insured. And so as money comes in, we simply buy more of the respective, bullion in the fund. In the Bullion Bars program, that's for high net worth investors. They buy the bullion outright, and that can be stored at either Scotia or Brinks. And with Brinks, it can be stored in about a half a dozen locations around the world.
That's good. That's very good news. If anybody's looking to store gold, or if you want to acquire gold and silver outside of your own possession and have it at arm's length, then I would say BMG-Group.com be a place to start looking. And Nick, you're the author of this of a book, $10,000 Gold, and why gold's inevitable rise is the investor's safe haven.
Mm-hmm.
Give us a brief rundown.
Audio version of that, so people can buy an audio version of that, both on Amazon and other digital audio sites.
Well, and links to all of this will be in the description box below. And if you have any questions for Nick, I'm sure he'd be happy to assist you in whatever way that is possible, either he or one of his staff. And Nick, this has been a great conversation. I love talking with you because you have a way of addressing some of my questions when I ask you about predictions without actually giving a prediction. Don't think I don't notice. But I appreciate that.
Predictions, typically take longer. Like when I wrote the $10,000 gold book, that was 2010, and gold went down and sideways and everything. Where if it was to follow like fundamentals, it should be closer to 5,000-6,000 today, but it didn't because of the manipulation. So that's the problem with predicting. To me, gold, I look at it as the safe haven and the wealth preserver, and I don't track the day-to-day movements, and whether it's $1,500 today or $3,000 today. To me, it makes no difference.
Okay.
The ounces stay the same.
Well, that's true. The ounces don't change. That's the good news.
That's right.
It's only what they're measured against.
That's right. And the price is really reflective on the currency, not what gold is doing, but what the currency is doing. And if you measure gold in all the major currencies around the world, it's gone up an average of 11% a year since 2000. How many pension funds got 11% a year?
Well, as we talked about a minute ago, they lost 5% last year.
That's right.
So, That's a 16-point swing.
That's right. And all they had to do was simply buy gold instead of all the other nonsense.
Exactly. Well, Nick, I'm not going to take up any more of your time. I certainly appreciate all you've given me and shared with my audience, and it's certainly appreciated. Like I said, I love talking to you, and I'm looking forward to carrying the conversation forward in 2020, and wishing you and yours a very Merry Christmas and a safe and happy New Year celebration.
Same to you, and a Merry Christmas to you too, Rory.
Thank you.